as mandated by law in our quarterly sessions to assess the compliance of the AIP.
I thought we always did. I thought in our quarterly session, we always assessed compliance. Am I wrong? Has that been not happening?
Well, I think that's part of taking a look at the various reports that are there as well.
Well, and if I could maybe make a comment from, with my audit compliance sort of hat on, right? I think this is sort of one of those, it's been done, but in a very indirect fashion. It's very hard to tie a document to a statement, right? And sort of one of the things when drafting sort of compliance documents, which I know Andrew is largely working on now, with the committee, I think formatting becomes very clear. Right? Like, it is a big helpful function of, okay, do you have the activity? Do you have a written policy to address it? Do your practices match your written policy? If not, what's your corrective course of action? Right? So, I mean, I'd say even given that there's sort of, for lack of a better term, sort of the list here, for lack of a better term, right? So some of the formatting, right? It would be easier to track and make attestations as to a quarterly, effort in a much more direct fashion if the formatting here is, better. I hadn't really looked at it that closely, but that's kind of my initial reaction as I'm sitting here flipping through Robert's code book and, the different documents here.
Well, listening to the concerns of all the commissioners and being that we're today the 23rd and the AIP needs to be approved by May 1st, what I would recommend is for May 23rd to have some additional discussion with respect to what we said, the simplification of putting everything into the SIOP that's a policy or a guideline, and then having the annual plan be purely the annual plan. Let's move that component, if we can, to discussion for May 23rd. Give people time to digest it, reflect on it, and so on and so forth. What I would then recommend is we take the version that was presented at the 228 commission meeting, which will be the more expansive annual investment plan, take a look at for approval for today.
Can I just say one thing? If we're saying that we're using the SIOP to satisfy some of the statutory requirements of the AIP, then they're necessarily, they would necessarily be included in the AIP. So anything you can do with regard to the AIP could be done with regard to those provisions in the SIOP. We can't stick it in the SIOP and then say it's not part of the AIP, but it is part of the AIP. You know what I mean? I don't see how we can't say we're satisfying our statutory requirements by having these in the AIP by virtue of having the SIOP, and then say, on the other hand, well, they're not really in the AIP, they're in the SIOP. I think that's what your concern is, that you're moving stuff out of the AIP and putting it in the SIOP, and then trying to count it for one but not count it for the other.
Well, what I'm trying to avoid is having, I would like to discuss any of these, it's actually 7 plus 2 more. 7 plus 2 more things here into a document where I can discuss without having to have a majority vote. I think as a fiduciary, if I set myself up to have to get a majority vote every time I want to
And you
discuss
see,
it.
they need to be in the AIP
Yeah.
to be able to discuss it. But if we're saying, is that what you?
Well, the AIP says that we're statutorily required to discuss compliance with the AIP.
Quarter.
Well, if we're saying that the provisions of the SIOP are pulled in as part of our statutory requirements of the AIP, I think they have to be capable of being discussed under the AIP, even though they sit in the SIOP.
Right, but
If we're saying that the SIOP is, that's what we're using to satisfy our requirements of the AIP.
right, but yes, the issue is it says the relevant portions without defining relevant, right?
Well, here's, how about this? Page 3, it says purpose. The purpose of, under the proposed AIP, it says, the purpose of the AIP is to provide a formal document for investing and managing the retirement system's assets to achieve the committee's investment objectives and mission as stated in the SIOP. Why don't we just put a comma there and say, which is incorporated herein, period, which makes the SIOP part of the AIP.
I think that'll help for that, yeah.
I think that happens now.
As a practice, what we've always done is considered those two the main structural governing documents. Every time we found an inconsistency between the two, we changed one to make it match up to the other one, because, you know, these things were just written to, you know, to a large extent, to make sure we had everything covered. And if there are inconsistencies, you should fix them.
Now, this is, okay, so this is the language of the AIP. This is, and how long is this AIP? Which one do I have? This is the,
The one in my book is,
So Reynolds, let me just make sure I
Tab
understand.
2 is what this.
The language you just proposed would incorporate SIOP in its entirety, not just the quote-unquote relevant portion. I can look at that.
we'll say
And
the
the
phrase, which is
revised
incorporated.
proposed, which is like 4 pages, that purpose is in there as well.
Which one is that?
That'll be under tab 4 on page 2. That purpose is stated in the much smaller AIP.
and which tab is that in?
Tab 4.
And my book is tab 2.
Yes.
The most recent one is
So
tab.
tab 1 is your current 2012-13 AIP red line. Tab 2 is what was presented at 228 commission meeting today. Tab 3, the red line of that proposed with the revisions of going to the smaller document.
From 228.4.
Right. That smaller document is tab 4.
That same purpose that the chairman was proposing to amend or have a little clause at the end of it is also in tab 4. in the
Right.
front down row. So it would be amending the same paragraph.
And so it'd just be as stated in the SIOP, comma, as incorporated therein. Lawyers, is that all right?
I would say comma, which is incorporated here.
That's how it is incorporated. So that brings everything to the SIP. And so,
Just change therein to it.
Okay. Got it.
I hear a motion that the AIP be approved as amended.
Oops. Are we still discussing it?
I got a second.
We need a second of that motion, then we can discuss this.
Okay.
Okay. Now, recognize.
So would we, if we were to pass the AIP, does that mean that we automatically pass the SIOP too, since it's incorporated therein? Or would we have to pass it?
If we pass the AIP and didn't pass the SIOP, we'd be incorporating the old SIOP.
So now we're going to discuss this.
We're discussing the AIP.
AIP.
Yeah.
Who wants to go first? Anybody?
I recognize you.
Okay, now let's see, I thought we were having a discussion. All right, so if we're only discussing the AIP, and we incorporate the SIOP, it's the old SIOP and not the new SIOP. I'll make sure I'm straight there, so only will keep me up to date here. Am I the only one who's discussing?
I don't know. You want me to recognize somebody else while you go?
Well, I mean, I'm kind of ready to go, but if nobody else is going to talk, I'll.
No, you go. You have the floor.
We were just talking about the practical implementation of years ago.
The AIP as presented, I do have some questions in it that have to do with a lot of Section 2 strategic initiatives, the dual reports. That language is not clear to me. In here, it speaks a great deal about kind of what's been done, and it uses terms like we've implemented something. Well, I implemented diet about every Monday night, Sunday night, Sunday night. I don't know what these terms really mean, and so I'm concerned about where we are in this whole Deloitte process. I know we've got a couple of members of the audit committee here, and maybe they can help us. But as we move toward more internal management, where's the jump off time? Who says, okay, we are prepared, we can exercise our fiduciary responsibility and accept this extra internal management, and I'm going to sign all of it? I'll raise our hand. How do we get to that spot in this document? Because this document, it looks to me like we approve it and then we move right, when staffs will move right into it.
Staff is currently managing portfolios internally right now today,
Mhm. Yes.
based off of what has been approved by the commission. So that's what this is.
But isn't this move us more heavily into equities, that, one that broaden the equity pool?
For ETFs, which we talked about a meeting or two ago, I can't remember. So trading the equities, because here's when we go back to the managing equities in-house. We're talking about literally thousands of securities. We don't believe that technology that we currently use can be supportive of the fixed income book plus another 3,000 or 4,000 equities. If you're buying an ETF, you're buying a security. So if we're adding a few more securities in the ETF and the passive framework, that's what the commission approved a meeting or two ago. The other implementation would be from the aspect of continuing to manage cash internally, short duration portfolios internally. There's a core fixed income portfolio. And then the other component of that is actually continuing to work with Russell via the overlay program for the exposures for the swaps, futures, those types. Also, if there's a specific exposure that would require more of a, we refer to as a basket trade, so you want to balance the portfolio to look more like the benchmark. They can take a look at your existing holdings and do a completion component to it. There may not be an index from a futures perspective or a swaps perspective that allows you to do that, so it's more of a basket trade to do that completion. So that's something that Russell would actually implement and execute from the directive.
And we would do that directly. If we do the directive, they do the implementation.
We, the staff, could do that, or the commission could do that.
I mean, I'm sorry.
Yep. Well, I mean, if there's something the
I mean,
commission.
no, I mean, you guys, I'm sorry, I apologize. No, I think we would do this for investment. Okay, so what I'm to take from that is that really nothing's going to change at all as far as us picking up more internal management. I mean, I thought I read in here, rationalize, simplify, and consolidate external management allocations to continue to improve feasibility for internal asset management with initial focus on enhanced passive strategies. That's the initial focus, that's where we begin. So I don't know what comes after enhanced passive strategy. Design, build, and grow internal capacity, a process where investment research, strategy development, and asset allocation recommendations. And I don't know what this last sentence is. It means make appropriate recommendations from the investment consultants, managers, people, lots of other stuff. But I don't, that's it. So we're not going to do any more than we're doing now. We just may do more of it.
With respect to what's been approved. For us to, September, I think, when we, or maybe November, when we talked about the internal asset management plan, to implement something of that magnitude, we need people, we need technology, we need trading systems. There's an infrastructure build out that has to be required. What we're talking about here is that as we go away from active management, going back towards either passive or enhanced strategies, and those enhancements can come in a couple of different flavors. One is through the cash management to earn a higher return of your cost of financing on the swap. So if you outperform that, you get a higher return over the benchmark. So that's enhancement, which would be very analogous to a PIMCO stock plus type strategy. The other component is working with Russell to do more of a factor-based enhanced indexing as well, as opposed to a pure market cap replication of a benchmark. So those are ideas that could be explored. To go actually to the factor-based component, and we'd want to make sure the commission is fully aware and comfortable moving away from that capitalization-based approaches. And so we'd look at your approval to make sure you're fine with that. But those are some of the things that we're talking about here. Again, we're not talking about adding to the trading of 3,000 or 4,000 equity securities that we had discussed with that internal asset management plan. That's not what we're talking about here. And then the other component is really some of the organizational changes we made to the organizational chart, where we're having a dedicated team take a look at the overall asset allocation with respect to market research before you may wish to take some tilts. And that's what we're picking up there, with respect to being in compliance with all the guidelines, the ranges, and things like that.
Speaking of, there's one practical issue, which ought to kind of brought to my attention. A lot of our external managers, we have them attesting quarterly, is that correct? The compliance with the AIT, which but if we add this language that fully incorporates the SIOP, right, our managers now have to be in full compliance with the,
relevant to them.
which aren't necessarily relevant, to them in the SIOP, right?
And Nancy, please correct me if I'm wrong, but where there's an IMA in place, there could be investment management guidelines. That would be the governing document for how they manage the money. It would look at those guidelines within that contract.
Yeah, they differ. Sometimes it is the guidelines, and sometimes it's just set in stone.
But I think that's a good point. We want to take a look at, again, for the implementation, there's going to be a transition period. And even if you approve the asset allocation and the benchmarking and the plans here, there's going to be at least a 6-month transition period here because of reshaping the portfolio to be reflective of this. I think part of that would have to be a review of those documents with respect to which investment guidelines they're adhering to.
So I say that as and I'm offering for compliance and audit to, at some point, I know we got the practical matter of needing to get this off, but to bring back specific language of what we determine relevant rather than pulling the whole SIOP.
I was just trying to, I was trying to
to
pull together a practical solution
Right.
to the treasurer's concerns, and just didn't seem to do any harm, but if it does, maybe if we could do that, and then in May, after audits have a chance to look at that, narrow that language down to where we're only sucking in what we need to suck in.
Right.
Yeah, and that's a good point too, that although an AIP may be approved, it can be amended at any point in time.
As can this now.
That's again the SIOP.
I suspect with the enhanced view of the audit team, we're going to be finding things like that all through the year. Okay, Mark, we'll move on from that because we're staying where we are with these things. On the strategic partnerships, of course, I don't have access to the contracts, and I've read a few of these, but I don't remember a lot of this.
I think the record should reflect you do have access to this kind
I don't have access that I can use. So the record reflects I might be sitting on my computer for 12 hours on the road. The strategic partnerships, as it says here, follow, I'll show it here. Strategic partnerships follow a similar approval process for each investment. It requires that each investment undergo due diligence by the investment manager and ownership staff. I wasn't aware of that. I thought that we utilized them. That's why they were our strategic partners. That we could do this if we wanted to, but that was the point of it. They're the idea generator and they're the muscle behind it. So is that a true statement?
That is a true statement that if a strategic partner is bringing a co-investment, we will review the underwriting of the strategic partner and be fully informed of that co-investment. If they're bringing a fund, then that would be an offering that you can invest directly or however, or even through partnership. So that's where the partner themselves, they're not due diligencing their own funds.
So we have just a handful of co-investments, right? But we have a zillion of the others. So this to me does not reflect what's operationally accurate. And it also says it would be reviewed by the commission's consultant. And I'm not sure that the commission's consultant is reviewing all of these strategic partnership investments now. I know that you have an enhanced rule, but how is that settled out?
So that was a change, this was last year, it was implemented, because historically, the prior consultant had not been as involved in those investments within partnerships. based off the transition of the entire partnership program from the prior CIO and limited staff that had covered those partnerships. That's one of the things that we actually incorporated, so that there is review. If there are new investments happening within the strategic partnerships, then well, at that point in time, it would have been NEPC, but at this point in time, it would be Hewitt that would be involved to review whether it's a fund investment or if there's a co-investment. And we haven't done any co-investments for quite a long time, so there's not been a need for them to review those. But if we do another fund investment or something like that, then Hewitt would take a look at the manager, the strategies as well.
So that would surely require that each new investment undergo due diligence by the investment manager and review by the commission consultant. They're not add-ons, follows on in the same group of funds, same manager or something. So it's each new investment.
And I think your team has actually reviewed the partnerships as a whole as well.
Right, so we reviewed the partnerships and the holdings. What we've agreed upon is that
Did you do that online?
we don't have a written thing that we pushed out to the commission.
I mean, no, did you see the NEPC review?
Oh, yes. Yeah, that's one of the first things that we got, is we went through that exhaustively. So I want to make it clear, though, that the due diligence that we do, and you may disagree with this, but I just want to make sure everybody's on the same page. The due diligence that we do for a standalone manager that's being brought to the fund that has nothing to do with the strategic partnership is a very collaborative effort between staff, ourselves. We do the operational due diligence. We're always going to provide you a write-up. We're always going to be pushing out and doing our operational due diligence. On strategic partnerships, that's one of the roles that your strategic partners serve. So where we are is a second layer of opining, commenting, expressing concerns. And we do that to staff. So we have not been asked to do that on a co-investment yet. We do co-investment work. It's not easy. So we have to kind of work that out, how exactly that's going to happen. But our group is very familiar with doing that. But it's a different type of due diligence. So we're not re-underwriting everything. We are reviewing it. We're talking with the strategic partner about it. We're making sure that we're comfortable. We try to have those discussions ahead of time. So for example, we've got a meeting with Apollo later this week. We've had them with Goldman Sachs. We've talked about what they're talking with staff about and where we have concerns. It's not always products we think are great. So we want to get that out there sooner rather than later, so we don't have a last minute surprise that causes everyone awkwardness. So that's the way that we're working there, but it's not the exact same, underwriting. So I just want to make sure that's clear. We're kind of that second level of review.
And that's what I thought from my reading of these. So, I think the strategic partnerships follow a similar approval process for each investment, which requires that each, and I think we ought to insert the term, new investment undergo due diligence by the investment manager and possibly R6 staff, may be reviewed by the commission's consultant, and may be approved by R6 internal investment committee. Do they see all of these?
The internal, yes.
They see all
That
of
is a
them?
process that we go through, where it's a co-investment, a fund investment, it comes through the internal investment committee. It has to be signed off. Then the strategic partnership investment committee, there has to be a unanimous vote.
I didn't know that. Good. We'll leave that one alone. And then,
So one thing I want to clarify with my comment with respect to the fund investment, I was thinking that more in a private equity sense. So if Apollo comes to market with, say, Fund 8, and obviously they're not conducting the due diligence on Fund 8, they're offering it. If you take another manager that is much more hedge fund specific, whether it could be a Lighthouse or a Grosvenor or an Entrust or something like that, they themselves then for those investments are conducting due diligence on those funds as well. So just to clarify that.
but, and that's good. That's why we hired them. That's why we made these guys, right? And hopefully they do a good job. And then, follow the next page. Not all investments are brought to the partnership investment committee. Now, I've seen, this language about enter and exit, the committee approves those when we enter and exit a new investment. But then aren't there follow-alongs or others that they do for us. That's one reason they're our strategic partners, that they're exceptions to this rule. We do, I mean, as the investment committee, do you vote on all investments in strategic partnership? I gotta say, I believe.
That's a change from just effect.
Oh, okay. They've all changed? I mean, the language of the partnerships have changed?
So in each partnership, there's required, in the Strategic Partnership Investment Committee, there has to be a unanimous consent for any investment to be made. So I would have to vote yes to any investment.
I thought it was once we started an investment or a class, that then there were investments that we didn't have to vote on. I realize that we bought telephones, and every time they buy a phone, we're not gonna be involved in that, I got that. But if you tell me that you're seeing them all, that's what I wanna know. I thought that,
If it's a, we're going to do a Fund 7, it's a capital call, we don't vote for every capital call,
No,
we
exactly.
just the commitment level. But if we have elected to invest on a direct basis with a strategy, then to invest or to redeem, that decision has to come back through that investment committee, partnership level.
and then the last is, the governing body of each strategic partnership maintains and manages policies, procedures, and budgets for their respective entity. I think there ought to be some note in here that those can change by a vote of the investment committee.
That the budgets could change?
A
or
lot
the-
of it, a lot of these can change. I think all of it can change. Procedures, budgets, and policies. The policy is the guideline. But my reading of those contracts is that the strategic partnership committee has the ability to change all of those, especially if we know these are obvious. But the budget is voted on regularly, so you know that change. And the procedures and policies, the guidelines can change themselves. So I'm not saying that's necessarily wrong, I'm just saying we ought to have that in here.
Yep, want to make sure we're clarifying that changes could be to underlying investments and not, any amendment at the strategic partnership level has to come back through the chairman of the investment commission. But changes to underlying investments,
Well, the commissioners would never know. I mean, the chairman might know, but the rest of us wouldn't know. And but you get,
if you amend a strategic partnership, I think everybody.
If there's a major decision.
There's two things I want to make sure we're not confusing here. There's a strategic partnership entity. Under that, there are underlying investments. And each one of those investments have to be approved by the investment committee for the strategic partnership. The guidelines that govern those may change depending upon the market conditions or what have you. So the investment committee at the partnership level does have the ability to impact those changes. Then as far as the budget, with respect to the strategic partnership, there's a budget that gets proposed and that gets reviewed. And that does get approved at the partnership level.
so both of those can change.
So,
And fee structure can change. I'm not trying to make a big point here. I just, if one reads this document, they think this is all set. When I sat down and read the strategic partnerships, I was surprised how much flexibility there is. And there's some language I'll have to go back through it because I can't write this stuff down. I can't write enough notes when I read on the internet and stuff. I can't print the stuff. That the entrance and exit to certain strategies allows them to continue. So I took that to be like if they get into fund the funds with, say, Lighthouse, then we're in the fund business with Lighthouse. And so they could make follow-on investments in the fund funds.
there are 3 investments within Lighthouse that I would say would fit that category. Within those particular strategies, Lighthouse would have full discretion with respect to the underlying holdings of those particular strategies. Absolutely. With respect to other direct investments within Lighthouse, we maintain that discretion along with the Strategic Partnership Investment Committee.
But the individual strategies are pretty big, right? I mean, they have a whole series of fund of funds, and we can invest in those. They can keep investing in those. But we're a little bit beating the dead horse. Obviously, I don't have access, and my lawyers don't have access to the contracts where I can read them on a regular basis. So, we can change the budget, we can change the fees, we can change guidelines. Is there anything else we can change at the partnership level?
Partnership level?
That the investment committee can do. But I just want to incorporate those in here. I don't think that it is wise, it is prudent for us to have this written in such a way that we do all this due diligence, our staff is doing, this reads that our staff, our six staff is doing due diligence on all investments by the strategic partnerships, and that they're being reviewed by the commission's consultant, and that these are all governing by the strategic partnership, maintains and manages policies, procedures, and budgets for their respective entity, but are subject to change with appropriate votes of the investment committees.
At the strategic partnership, there are limited things that can change. The underlying investments, when we're talking about maintaining and managing those policies for those can change, because those assets have to be managed. Co-investments would be one area where you could have significant changes, which we talked to the commission about one of those in executive session. So, and then all these other changes, so for instance, if you have a bank loan strategy and they want to buy an asset that's, it's a little bit longer dated, they have to bring those, they can't just freely, the partnership with the manager can't just freely do that without an approval. So it's not as though the underlying managers get to freely change and make up their own rules. All that is governed by the strategic partnership investment committee.
Well, I mean,
I'll wish you remember.
yeah, but the guidelines, you have to admit, are pretty broad. I mean, when you look at the strategic partnership guidelines for, say, Lighthouse or Apollo, I mean, you go down that list, I'm sure that there's an investment that's not in there, maybe go to the dog track or something, but everything else is in there. I mean, you can buy and sell, private equity, hedge funds, securities, short, swaps. I mean, like I said, maybe there's something not in there, but that was given to them, we voted on that. That was given to them, and they get to choose in that. Then we're gonna have new members on here, a couple anyway. And I just think it's important, because the longest time I thought all this stuff was set in stone. I had no idea that the real, I mean, we actually put our fingers on very little of the investments. It's all done behind the scenes. And so, I'm not saying that's not right. I just don't want others to take as long as it took me. And the only reason I found that out is because I've spent time in the file room, is that these things are not set in stone. And that we do not, our staff does not do this due diligence. That just doesn't make us accurate.
I
So,
don't think we do due diligence.
well, it says here, Herschel, you know what I'm saying. Here, the strategic partners follow a similar approval process for each investment, which requires each investment undergo due diligence by the investment manager and the R6 staff. And just now you said sometimes you'll do it. But if we pay somebody to go do due diligence for
Let's
us,
take a time out on this whole thing, because I don't want to confuse this. It's a very important issue. Then a Lighthouse structure, if they're recommending the manager that's going to be on their platform, and other investors will be in it besides ourselves, I can promise you they're doing due diligence on that manager, along with ourselves, and Hewitt now would be conducting due diligence on that investment as well. And then an example of an Apollo coming out with a fund paid for private equity. Well, they're launching the fund. They're not going to do due diligence on their own fund. We will, along with Hewitt, conduct due diligence on that.
let me go back to the file room. All I know is the Lloyd says we don't do it. I don't see where any evidence that we do it.
I don't think
Well, we
we
can't
ever
possibly
said-
know what we're gonna do during 2013, 2014.
Well,
This is, next year's an annual investment.
I thought they were common sense changes that just didn't limit us to anything, it didn't do anything. It seems to me. Well, we'll go back. And when I write you a letter next week and ask you for the due diligence involved for several, I hope that I'll get a response. And I hope that I'll be able to see those.
I guess I'm not clear, Mr. Treasurer. Are you suggesting that we are not performing the due diligence that we just heard Herschel tell us that we were in conjunction with the consultant? Are you refuting that?
It's hard to know when we don't have.
Well, wait a minute. No. It's not hard to know. He's telling you something and the consultant is telling you something. Are you telling me that you don't believe it?
I wrote down the terms possibly in May. And Suzanne says they review, is the review due diligence? And are y'all staking your name on this thing?
So.
Because you said you weren't doing the due diligence, you were reviewing.
Right, we're
Okay,
reviewing
Ed,
the
is
due
that good enough for you?
diligence.
All right, well, this is
and
what I'm
or-
trying to clear
Well,
up.
I mean, she said it, and I don't appreciate your tone with me. Every time you talk to me today, you talk down to me. And I'm
Because
trying to
I
ask
don't
questions.
appreciate this continued adversarial relationship. We're here to work together.
Yes, and I've asked.
You
questions.
understand that?
I've asked questions. You want to stand up again and spit on David and me? Is that what was said?
I resent your
Now, come on, I've asked you
That's-
questions.
that's-
I've
that's-
asked legitimate, I've asked legitimate
Why don't
questions.
you behave yourself and act like a human being for a change?
No, this,
This is uncalled for. I've
It's
asked
totally
legitimate
uncalled
questions.
for. I resent you,
Yeah, you resent me, that's fine.
absolutely.
That's great.
Now, let's get back to the subject at hand and cut out all this personal stuff. Now, Suzanne, would you please explain what you were explaining?
Sure, happy to. And there are two different levels, and we can look at that differently. So the way that we've looked at, let's talk about due diligence on a manager that's being recommended by staff. No strategic partnership, no additional party there. So just a straightforward manager recommendation. We've usually worked together throughout, the preceding months to know who they're looking at, who we recommend as an alternative. We go back and forth, et cetera, come to a recommendation as to what's going to be, does it make sense structurally, is it a good manager, is it a good idea. We do our operational due diligence, we do a full underwriting with our manager research folks. From scratch, staff prepares their materials, obviously has done thorough work on their part, analytics are done, et cetera, we bring it all to you as a combined recommendation is approved. Okay? So that's how a typical manager recommendation would work. Strategic partnerships a little bit different. So let's exclude fund of funds because those obviously they have authority to hire fire. We do not, if somebody's a fund of fund, we do not question what's going in there. We look at that as a
So
management.
we don't
portfolio.
do due diligence on the fund to
We
fund
do it
investments?
on the fund to fund themselves, but we do not do it on every single manager they might hire. So if you hire somebody as a fund to fund, that's their job. They're accountable for it. We can't tell them not to do it anyway, but we look at it and such, make sure they're not hiring bad managers. That's part of our due diligence. But on a strategic partnership, and there haven't been a lot of ones that have been in place since we've been hired, by the way. There hasn't been a lot of new stuff that's gone on. It's mostly been reducing the strategic partnerships, by the way.
right.
So of those that there has been new investments, we are generally having discussions. We're having discussions with the strategic partners in advance. Oftentimes they are telling us ahead of time what they're looking at. We're having discussions and giving them feedback real time. There was an investment, as an example, that Goldman was interested in that we didn't think was a great one, and we told them our concerns up front. So when a recommendation is brought forward, we hear it from staff generally. We then will tell them what we know off the top of our head, which is generally we know all these funds that are being brought out, but occasionally there'll be one we don't know well. If we don't know it, if it's not been already underwritten within our organization, we do a review of the due diligence of the strategic partner and of staff and opine on it. Okay, so that's different than a full underwriting. A full underwriting oftentimes we've done on many of these investments, but it's not required for every strategic partnership. However, we are looking at the investment thesis, the manager's track record, our general thought on whether that's a good opportunity or a bad opportunity, and providing all of those. So it's a different level of due diligence, but I just want to be super clear that it's not a re-underwriting, because that's one of the reasons you hire your strategic
I
partners to
agree.
bring these
And
ideas.
that was my effort, just to put that in there.
Right.
Yeah.
Or to have some language that would allow another user other than the 6 or 7 of us.
It's important to understand the difference.
That's right.
Well, and I was going to point out one thing from the audit, right? The Deloitte report deals with point in time or things up to that point in time, that they did their work, right? We had a CIO change, right? I would also say there's a difference in what the legal documents will recognize versus this document. And this document's a forward-looking document, right? This is our, for the
I agree.
upcoming year, right? The other thing I'd say just about sort of legal documents, right? Like, you will not find a strategic partnership document, I doubt, I mean, correct me if I'm wrong, reference to our internal investment committee, right? I mean, that's a concept that doesn't exist inside of that. That's a procedural element that exists in our document as part of our procedures, but I don't think you'll find it referenced in that legal document, meaning this part of the procedures as it relates to the internal review process. That's an internal function. Executed via our veto rights effectively when Herschel walks in there knowing, okay, I'm going to veto this or not veto this, right? But that may or may not actually be communicated to that strategic partnership or in that document. Correct me if I'm wrong on that, but that's effectively how it's per function. That's what gives our internal investment committee, which is not a recognized entity inside a partnership document, its power is the veto, right, as exercised through Herschel, who would be a member of that committee. But I think it's important that we distinguish in the Deloitte sort of point in time and what that point in time was, which was June 30 of 12, I believe. Right.
They started their field work in January, and field work typically goes a period of time. They actually effectively ended their field work in June 30th of 2012 over our processes, but there's been significant changes to the process since then. So it's definitely a point of time.
Right, and then, that's why we had NEPC and Herschel, on that first big project of going to do the lift on these strategic partnerships. So I think what's in here does reflect what's going on today, but maybe not what was going on historically speaking as it relates to the
Yeah, it's a
Deloitte
forward
report.
look.
Our purpose here today is to adopt an annual investment plan for the upcoming year rather than rehash.
I'm not trying to rehash things,
Etc.
Mr. Chairman.
Does anybody have further discussion on the adoption of this plan or proposed amendments to the annual investment plan? We can move on with it.
Well, if we can't discuss it, I move that we do something. If we can't discuss it, I will vote no. I believe that there has been significant health work done. Monica, Andrew, I've been in the audit committee hearings, meetings, but I've heard Mr. Gillespie ask many questions, and I appreciate that. The whole point was to just put something down that was, it's only 4 pages, and we're on page 3 of it now. So we haven't gone too far. But if we can't discuss it, well, let's just say we can't discuss it, and we'll vote on it. And I will vote against it because I don't have assurances of these things. And I do have some knowledge. I have read a year and a half of these internal investment minutes, and I don't remember seeing any of the strategic partnerships.
What do you think? It's a good idea to do these things going forward or not? You go vote, think it's a good plan, but you go vote against it?
No, I just said it was a good plan. I said it was, I wanted to discuss these things before. Let's look. Tide his term. I know where I am in this thing. I knew 30 seconds into it, it give you your quote where I was limited. So if somebody wants to move forward, we'll move forward.
Does somebody want to call the question, ask the question to call?
I do think, just to distinguish the point in time, that the addition of the language previously mentioned by the treasurer, putting new investments, right, or putting, making reference to the point in time due to the confusion around the point in time, right? But given that this is a forward-looking document, I think implicit in the year stated on the cover, right? Because again, this would be effective July 1 of 13, so this in no way changes or reflects.
Yeah, I think, to me,
I think it's sort of
implicit,
implied.
where would you want to add the word new?
Page 3.
And where?
The strategic partnerships follow similar approval process for each investment, which requires that each new investment.
Okay. You want to insert the word new between each and investment? Okay. Any objection to that?
Right.
But I said, today, each apply, and you, no harm, but you.
Yeah, that seems to do any harm.
Just the one word doesn't matter. It's the whole point. I mean, I was fine with the one word go. It's a bigger point to be made, and we're not going to get to that point. So let's-
Well, I would like to make a comment with respect to, on page 4, the very top there, that middle, or the sentence there towards the end. The governing body of each strategic partnership maintains and manages policies, procedures, and budgets for the respective entities. That's referring to the strategic partnership.
Yeah.
The partnerships will have operating costs, audit, tax, those kind of things as well. The underlying investments is where the investment fees are charged. There's not an investment fee charged at the partnership level. I think there's only one partnership that even says some language if they hire third-party managers that they could do it at the partnership level. But the investment management fees, the investment mandates are charged at the specific investment manager level, the investment level. But this here is referring to being able to actually manage from an operational perspective the entity itself.
We'll say with the Lighthouse platform fees be considered at the partnership level? Or is that something else? And we pay them through the partnership.
So as we do investments, each investment itself will have a negotiated fee structure.
With the
partnership,
With the partnership.
within the partnership itself, the returns will be reflective of what those underlying managers' costs are.
And what about the $4 million paid?
That's a strategic partnership level. That would go back to platform services. Those are not necessarily considered investment management fees per se. That's what I'm trying to get to. There will be cost to the partner. It's a business, right? You negotiate these contracts, so there's legal costs. Yeah.
And those fees can be changed. So all I was trying to say was when
Well, I
we,
mean, they're forecasted annually. You try to remain within that budget. But then I'm trying to explain this to you because I know it is complex. I'm not trying to be.
well, it's not all that complex. You sent me a letter that said the fees can be changed. You sent me a letter that said that. All I'm getting you to send it back to me.
I don't know which letter you're referring
The
to.
Sarah corporate letter that talked about that these are the fees. I don't even want to talk about Lighthouse now, but these are the fees of the partnership. But please remember, we have the ability at the partnership level to change the fees. The last
underlying
paragraph.
managers we're referring to. They're negotiated, yes. You can negotiate the fee structures. Investment management fee structures we're talking about.
We were talking about the platform fees.
So carve off the platform fees if you want. All the fees, right, will eventually come out of the return of that partnership.
My letter to you, I really apologize for this. I didn't have any intention of getting all this, but my letter to you asked you specifically about partnership fees. I know that you answered all these, about platform fees. I know that you answered all those other questions, which were a part of it. They obscured the answer, and I know I can't solve for any of the problems.
I'm sorry, but I actually didn't receive a question from you with respect to Lighthouse. I don't recall receiving that. I think it was an email out to the commissioners with a bunch of discussion points. And then we attempted to respond to that. But I'm sorry if I missed a letter or something that had specific questions.
Mr. Office, I did do a review of Lighthouse. It's being finalized and it is going to be discussed at the audit committee.
You know, the problem I have is commission staff has all the information. I don't have the information. We sent at least 3, maybe 4 emails. We've talked about it at least 5 committee meetings. Y'all quoted my things back to me. It was very clear. We had a summary memo for up to 52 basis points and no pass-throughs, and the contract says 65 basis points with contracts. And with pass-throughs. And that was the whole point of all of
Well, I
that.
think we're now talking about a contract for.
Are we gonna talk
specific
We
about
management.
got way off the subject.
Well, I mean,
And secondly, I think your point of what you're referring to is only for a specific few investments as opposed to the entire thing. And recognizing, and I believe it was in Ms. Corbett's memo, that the actual fees, realized fees paid were much lower than even the 50 or 52 basis points.
because he used the platform fees on the whole assets under management. So I assume we're paying platform fees on the fund of funds as well? Because that's what it was figured on.
Yeah, Will,
Yeah.
I think you're totally confusing the issues. I really do. Sorry.
I just want to make a comment about that because, early on, a week after I started the treasurer, I actually brought this Lighthouse issue in response to my attention, and I appreciated that because I'm trying to learn. And, as Andrew just said, we have taken a look at it. We're going to respond to that. In fact, I kept looking at it through a day or so ago when I talked to Alan, who's the one that signed the contract, and his interpretation of what happened. So we are going to be addressing that because the treasurer does deserve, final response on that. Hopefully that'll be the last response. So we're going to get that to you.
Just to clarify, I did the review and management is
My
responding to it.
request.
I did an independent
Right,
review.
yes.
All right, so we've got on the floor the AIP with an objection to amendment of inserting word new in the prior indicated place on page 3. Does anybody else want to have any discussion? We're ready to bring it to a vote. All in favor of the adopting the AIP as presented with that amendment that was discussed, please signify by saying aye. There was 2 amendments we discussed. Please signify by saying aye. Ayes have it.
Nay.
Nay. Jim Powers sent me an email and he asked me to let the record reflect that he would like to vote aye on the AIP in his current state, as we've just All right. Talk about the SIOP, or you presenting that, or Susanna?
Can I just ask a technical question on that? Is that just going to be a note in the minutes, or are we actually allowed to vote by proxy?
That'll be a vote in the minutes. I don't think we have proxy voting.
I don't think we're allowed.
He would like to do that.
So in the black booklet, it would be under tab 5, would be the red line version. And again, if you're looking at this, it will test your eyes. Again, this version, this red line version represents moving the policy type language from the AIP into the SIOP. And that's what's presented here. Obviously, that would be a significant change to the current document. On page 1, there was some insertion, and again, this is more just definitional language with respect to an overview of incorporating PIBA and the retirement system and investment commission here. The mission, the vision, and there's some language here under purpose that was added that the SIOP represents the overall guidelines that apply to the retirement system's total portfolio. All decisions that affect the management of the portfolio must comply with the guidelines contained within this document and be consistent with laws of the state of South Carolina. So when I mentioned a little bit earlier that the AIP had that one deletion about compliance with law, we're picking it all back up here. It's still in some of the portions of the document here, and so it's referenced. We move forward to page 3 of this document. Again, the roles and responsibilities. This is actually at a suggestion of Hewitt with respect to some of the things that we need to do to have in the SIOP. This is broadened out to include the Treasurer's Office's statutory custodian, the Commission, PIBA, Budget Control Board, the co-trustees. If we manage assets internally, it's picking that up, external managers, the role of the consultant, and the internal audit and compliance as well. So that's an expanded list of roles and responsibilities. Now again, this isn't getting into every detail, but it's giving a high-level overview of who everyone is and their general role. Some of the primary policies picked up on the next page under B right here, about middle of the page. That is capturing the governance policies that the Commission just went through and referring to them here in the SIOP, as opposed to the bottom capturing internal operations policies, which that really is the section of the organization that's led by our Chief of Operations, Derry Oliver, and picking up on some of the internal policies there. If we move the page forward, again, this is not necessarily a full exhaustive list, but to give a good sampling of some of the key things that he's responsible for from a policy perspective as well. And then the investment objectives and policies in the AIP, those are much more related to the investment staff. And so that's what this section is capturing as well. With respect to the investment guidelines and giving authorization to the CIO and investment staff to actually implement those investment directives, whether it's from the Commission specifically in the Commission meeting, or even through the policies. So the general letter C there, that general policies of hiring and firing, there has been some slight rewrites of that language. And some additions to that as well. This again comes from the AIP. If we move to, thank you, the next page there, the second to last paragraph is a new insert there with respect to investment fees, and again, taking a look at fees and passive exposures as opposed to active exposures to continuing to work and identify ways that we can be more efficient about investing and hopefully reducing overall fees. But at the same time, we want to be cognizant of the impact that that will have on returns if you move from active to passive mandate as well. The following page, the green just means that that was existing language that was in the SIOP, but it's been moved. It's been moved up to this section as well. We did change one of the words here at the very end. You'll see in red from having broke down to deteriorated. So the next page really starts setting up the investment policies. And a significant amount of this, again, was language taken from the AIP itself, whether it was some of the new proposed language or some of the existing language as well. The modification has been made to the investment objectives as opposed to what had existed. Under A, you see the current language that would be proposed, and here in the red line would be some of that language that would be deleted or changed, if you will. The following page, we continue to pick up. You can see the old, very, very high level asset allocation chart there. That will be replaced with, I'm going to go a page forward, the new asset allocation as it is approved by the commission. Again, I just wanted to point out to you that where we have this current, that goes away. This change, that goes away, so what you'll actually be left with what would be the specific targets, which would be this, and then also the minimum and the maximum ranges. So you have those three columns with respect to those asset classes. That's what would be actually reflected in the policy. This language here is respect to the 70% maximum for equities. That was moved from the AIP to the SIOP as part of that asset allocation component. Taking a look at Hewitt's latest estimates with respect to the risk and return expectations on a 10 and 30-year basis, that was added. If you go to the next page, this is the line-by-line expected returns on a real and nominal basis, and then the expected volatility of each one of those asset classes. So that's the capital markets outlook. This is their 10-year forecast. Allowable investments, we made several changes here. There was already a section that talked about that, but we've added a little bit more language with respect to what's allowed. And on the next page, just as important, and some of those things would be some of the things we've talked about, such as ETFs and so on and so forth, but it really refers back to some of the statutes with allowable investments as well. The restricted investments. This right here in green was already in the policy and has been moved up. We've added this right here with respect to not investing in Sudan. With respect to the outcome of the Iran divestment that's been introduced, we may have an update depending on the outcome of that potential bill. So that would be another area. Again, you can see some of the specific language that has been replaced right here. As we move forward, this by and large really was the exact, you can see it's in black. This is not really changed. This is the exact same language that's already there other than changing some of the numbers. So at the very bottom, that's where you see, yeah, right here, that was that terrorist language that got moved up. So if we can go forward to the next page. This right here is really with respect to rebalancing of the management. This language had, or similar language had, was reflected in the SIOP itself, but it has been rewritten slightly, and the key component to it is that staff will maintain the investments and review. There's one thing that needs to be added right here, and that was actually pointed out by Suzanne, is that at least quarterly, that staff will review the asset allocation and compliance with it at least quarterly. In reality, will probably be closer to monthly at least. So I want to make sure that language is added in here as well. With respect to the overlay component, we want to make sure we have this net of overlays. Here it just says cash, but as we've made that correction earlier today in the asset allocation, the short duration itself could be used as collateral to back up the swaps and so on and so forth. So we just want to highlight that, and we'll add short duration here to reflect that that too could be collateral. And if it is, it'll be deducted out on the exposure report. Show the net basis of what that is. Some of this language, again, was taken from the proposed AIP and embedded here. Let me point out a couple of changes there under number 3 here, the hedge funds. The word opportunistic was added, and then real assets, that was commodities, and that was changed to real assets. So if you, in real assets, we would think about commodities and real estate. Now, private real estate, if you're really not thinking about some form of a hedge fund necessarily. However, if you get into REIT structures and things like that, I want to make sure that that would be captured. Small chance that we would actually do that necessarily from a REIT perspective, but I wanted to be more inclusive of the policy there. Again, this reflects that to some of the discussion earlier of where hedge funds themselves can be used and which asset classes, and that's what this is meant to pick up. But again, total hedge fund exposure cannot exceed 15% at the plan level. So the manager level constraints and mitigations, a lot of the same language there. And if I can get you to go ahead one page, that really sets up the discussion here that I want to point out to the commission. So broad mandates, we're really giving some examples here: global equities, core fixed income, global asset allocation. So these are very large type allocations, and most of these will be either on an enhanced basis or passive type basis. Well, they could be active management as well for global fixed income. But the whole idea is these tend to be the much larger allocations of $1 billion+ to a single manager, and these could grow. We do have some mandates with PIMCO and BlackRock as well that were approved for up to $1.5 billion. So these type of allocations can be quite sizable from a total plan exposure. And so what we're trying to do is capture market appreciation in the plan versus a dollar approved allocation to a manager, because at some point in time, as growth continues, you could be bumping up or exceeding those dollar approved. So it makes sense to put it much more on a percentage basis. And if you do get a drawdown, well, then that naturally brings back that percentage allocation in dollar terms back to a manager as well. Specialty mandates, this is where we would tend to think about markets that are less efficient, so specialty equities if we did a healthcare manager or a tech manager. Very specific credit, emerging markets debt, emerging markets equity, and hedge funds. These would be limited at 4% for maximum of total plan assets. Now, that is really getting to an upper level for some of these with respect to a specific manager. In reality, as we bring those through the commission, they're probably going to be at a level that would be closer to 1 or 2% of an allocation at a plan level perspective. With that said, we have had a couple of instances of things that have been approved that would fit this category that would get you to that 3 to 4%. So again, we just want to be cautious of making sure we have appropriate guidelines and controls in place, but they don't become overly restrictive where every commission meeting will come back and asking for exceptions as well. Private market mandates, these do not have a percentage on them for each specific mandate. These mandates are tied back to the specific dollar commitment level by the investment commission. So that doesn't change unless the commission changes the dollar commitment to that strategy. And again, this comment here just really reflects that some of these that tend to be much more beta type strategies will be the ones that would have some of the, actually this says the limits itself. So if, for instance, cash, at one point in time we're holding 12% cash. If you put, have 12% and, we're looking at having some 30% global equity. If you put those in passive mandates, even if you did through purely the overlay or you hired a couple of people, you're now looking at 15% type allocations. But again, this is replication type strategies that we're talking about here. And the language in green, that's just some of the information that had been moved and adjusted with respect to some of the rebalancing components and allocation components as well. The section that we've added in here is this risk management component. And we wanted to start outlining some of those key things that how we can actually control from a policy perspective some of the major risks of the plan itself. And we've taken those at a very high level, and then we've taken some of those at a little bit more of a granular level. And the first step of this is really thinking about the evaluations. We're taking a look at the liability stream that was pointed out a little bit earlier today, and the funding ratio. So that's information that we'll continue to incorporate and understand what those risks are. Then at least every 5 years, the asset liability study. Now again, it says at least every 5 years. If conditions warrant, you can have a study done 2 years from now, whenever you want to. And then governance policies, internal investment policies, those are critical and key to make sure they're crisp and clean and everyone understands them. So I think that's very important. And again, these are at a much higher level governance component and reflect back to why are we here, and that's to manage the retirement benefits, and we cannot miss benefit payments. At the portfolio level, this really gets back to asset allocation and maintaining adherence with that policy, because that will be the significant driver for explaining the returns and performance of the plan itself. And then also being in compliance with the manager level diversification and policies that we've talked about here, as well as just adhering to all the policies and procedures as set by the commission as well. Maintaining liquidity for benefits. I believe with new allocations, 2 or 3% allocation to cash, but there's also an allocation to short duration. And the idea behind some of that short duration is that it will actually have a maximum maturity of 3 years on some of these assets, for short duration. And if you hold them and roll them down, they are becoming cash for you. Then the track and manage counterparty risk for internally managed allocations, including the overlay program. And that's really what that's specifically about. That's where a significant portion of our counterparty risk would come from, would be through the overlay program. So Russell has a credit team, and they constantly manage and monitor that. There's roughly a dozen that are on their approved list. And so that component is constantly being evaluated by Russell. And we'll have conversations with them, get snapshots of what our exposure are from time to time as well. And, the next component, the next 2 pages, I think. So you'll see a lot of things that are deleted. And the reason this was deleted is it really gets back to the manager selection component of it, and it's really, that's being reflected and picked up for due diligence policies internally as well. And so that's where we're picking up that policy and process of how we actually go about evaluating managers from the initial perspective as well as ongoing. And as you all know, we've introduced Sarah Corbett to lead the operational due diligence component. So we're building that out as well. And obviously the internal audit function for an oversight to make sure we're following the policies and procedures and guidelines established internally already. So if I can get you to move forward a few pages, you'll see some of it turn to green, and that just means that those things have been moved elsewhere. So maybe one more page. Investment manager guidelines. This has always been a significant portion of this policy here as well. We've made a few changes. Some of it is a little bit definitional. We used to have the word portfolio in here, but that really means the plan level from a definitional perspective on how we used it prior. So some of the things we've changed here is actually to go back to either a mandate or an account level when we're talking about a specific manager. So you'll see some of those things that have changed. I think we've added more here as opposed to deleted anything. Again, we've made a few word changes. On the next page under 22, there's a concept there I think that needs to be spelled out a little bit more. And this is with respect to the cash levels and things like that, that there's a notification of at least 48 hours back to the commission, and you have to furnish an explanation. So we wanted to make a couple of enhancements there. Just trying to see if there are any other significant portions here. If we go to one more page, this language with respect to short duration, it's a lot of verbiage and it has some historical context about, going back to 2010 and some of the directives back then. But the key thing for us to capture, which we have here, are the actual specific guidelines themselves. And we're moving away from this concept of the blend of the cash and short duration allocations. So there's a 3% target, but it's, correct me if I'm wrong, a 2 or 3% target back to short duration, but those will be separate and not the blended component, if you will. If I can get you to go page forward. And another page forward. One more. Okay, so asset allocation. We've actually added this section to the SIOP with respect to those managers there. And again, these are the managers that have some combination of global equities, global bonds in their strategy as well. It's the alternative manager guidelines. We've made a little bit of cleanup language in here with some of those definitions and what we're looking at there. The next page, this strategic partnership information, you probably noticed was deleted prior in the SIOP. So that just means it's been moved down to this section here. One of the things that it's hard to see, but right there it says maintain adherence to investment plan at the partnership level. We recommend deleting that out. And because trying to forecast what each one of those investment plans or the specific investments will be, it becomes almost a futile exercise because markets change, opportunities change, dislocations change. What they see as opportunities today versus what you get in 6 months, it changes. And so it's almost an exercise you just have to constantly review those. So we've deleted that out. Also, with that said, and one of the comments that I would like to make is the Commission has reviewed this with a ton of resources from the prior consultant, the staff, as well as the existing consultant and working with staff. And Adam Jordan is working through, as a coordinator of the entire strategic partnership relationship, and going through leading the project, rationalizing. So we're actually in the process, as you know, of reducing the strategic partnerships or redefining what some of these would be. And the development of that program took place over a span of years. I think the first one was 07, maybe 08. And as you get to the last one, the things that you have in those evolve and change, if you will. So the idea is to go back and to take a look at all the reporting structures and requirements and to standardize that across all those partnerships. So that's part of what will be happening as well for the ones that will remain. And the other ones that will not, we're just in the process of transferring those assets out or terminating and taking cash. So the next section down here is the periodic reports to the Commission. You can see a lot of this is green language, so it's already in the policy. We did add right here with some performance evaluation for private markets to add that multiple on invested capital to give you a better idea of where you're at with respect to the J-curve and the timing of that investment overall. Not just an IRR, because that IRR you have that J-curve come up really awkward and funny and you ask a lot of questions about it. But if you start getting that multiple of the actual capital called and what the return on that investment's been and where you're currently at, that gives you another measure with respect to the overall performance of private market investments. If I can get you to go a page forward. Again, you'll see some of this language has actually been moved. This language right here is actually, it's now into the risk management section. We've continued to build this out. We've made a few little changes through here, a little bit of cleanup with respect to reporting guidelines back or for on a quarterly basis from the managers, things that we expect to receive. We took out this review of investment process, because we understand the manager and what they're doing. You just kind of constantly have that dialogue already, and it's you're taking a lot of time to review what you already know. And it's more of a checks and balances that they're implementing the strategy, and that's what the rest of this picks up, is that they're implementing what they told you. Portfolio disclosure, again, this goes back to the transparency component. This was from the AIP, and it's put in there that if there are certain investments that could be damaged because of releasing information today as opposed to later, then we want to avoid damaging any investments in the trust. Portfolio implementation and benchmarking. This section here was taken from the AIP and moved into this section here. The language right here says the commission authorizes the CIO to develop the solutions effective necessary to be able to implement the strategies as well. But again, that's by law and by commission policies and so on and so forth. So again, that's just more of a designation of authority to be able to implement the plans that we have in place. The other thing that changed is this last sentence here was added. The policy benchmark will be the weighted policy allocation to each one of these indexes. So let's just give them a little bit more clarity as to how you're going about calculating that actual policy benchmark. This policy benchmark, again, this is the placeholder for what we had talked about and what was presented in some of the other meetings. Once the commission finalizes that benchmarking, that approved benchmark will take the place of this right here. So, then the next part is the placement agent policies and securities litigation, and there were no changes to those policies. That concludes my
Do I hear a motion to adopt the statement of investment objectives and policies as amended and offered by our supervisor?
I'll make that motion.
Is there a second? Any discussion? I want to ask one question I heard from Lee on. We did not actually adopt the benchmark asset allocation, did we? Is that set forth in here, or are you saying we need to adopt that and then plug it in?
We would need to actually, apologies, go back and adopt the asset allocation and benchmarks and plug them in here. These may have had, these placeholders could have older versions, and so I want to make sure the commission is approving specifically what was presented today.
Okay, so if we vote on this, we've got a blank on that page, and then a few minutes later, we need to vote on what to insert on those blank pages.
Yes.
Okay. All right. Any further discussion? All in favor, signify by saying aye. Aye. Ayes have it. Alan's out of the room. I didn't get him a chance to participate in the discussion. Can we reconsider this after he gets back in the room? And now let's turn to the asset allocation and benchmark for a second. Maybe we can get it the right sequence.
And the asset allocation and benchmark would be what was presented in the opening discussions and really walked through by Suzanne. So if we can go back.
Does anybody have questions about the asset allocation and benchmark that weren't asked before?
Can you approve these separately since they're already in the document to approve?
Well, I interpreted what he just said to say it's not actually in the document.
Well, things were cut and paste, and as you get different versions going, I wanted it to be crystal clear that here's the asset allocation you're approving, here are the benchmarks that you're actually approving, in case something gets, you're doing the different versions, that something is changed or tweaked or whatever, some of those pictures.
Okay, Alan's back in the room. Alan, there's a motion on the floor that we adopt the statement of investment objectives and policies. And that's been seconded, and then there hadn't been any discussion so far, but there was some discussion. The fact that we need, right after doing that, we need to go back and plug in the asset allocation and benchmarks, whatever we choose on that. You got any additional questions, comments?
What about, do you want your that recorded in terms of the SIP? Yes.
took it from this one, that you didn't vote against.
We have not voted. All in favor signify by saying, we unvoted. When I noticed you weren't in the room, we didn't count that vote. So all in favor signify by saying aye. Aye.
One opposed. I'm not even asked if I was kind of opinion.
Do we have one opposed?
Yes.
Oh, okay.
Your voice in the wilderness.
Now, we have a motion that we adopt the asset allocation and benchmarks as presented by the CIO earlier in the session. Your motion to that. Somebody, to adopt the asset allocation and benchmarks.
That's presented beginning of the meeting.
It's a little bit confusing. We should have voted on it probably there. What
Go
page
back
was
to that
that?
slide.
Yeah.
If you'd like to go back to slide, whoever's running the PowerPoint, it's probably the third slide, so it's quite a ways back.
We're at 35, 36.
Yeah.
35? Okay,
35, 36 in our vote.
great. Okay, so maybe one more back, if you could. Back one more.
So I'm losing the votes.
Other direction.
Page 34 would
There we
be
go.
proposed asset allocation, and page 36 would be the benchmarks.
Great. So it'd be that green column on the screen.
I hear the motion from Mr. Girotti. Is there a second?
Second.
Any discussion?
Chairman, just for clarification, it's the proposed targets, plus on the next page, it's also those ranges.
So it'll be 34, 35, and 36. I mean, the asset
Yes, and then the
allocation, the
benchmarks would be
ranges,
the
and
next
the
page.
benchmarks are
Good
what
point.
you're asking us to approve.
Right.
And if you look at the motion sheet, it would be motion number 3A is what we're. Any further discussion? All in favor, signify by saying aye.
Aye.
All opposed? Ayes have it. Okay. Next agenda item is Mr. Oliver, COO's preliminary assessment.
Thank you, Mr. Chairman. I'll try to talk loud so everybody can hear me. I want to say that I'm honored to be the Chief Operating Officer of this organization. It's important to so many people and have the opportunity to serve the participants of trust funds. And I know I've said it before, but I'd be remiss in my first presentation to you, that I personally again thank each of the commissioners for giving me this opportunity. And I pledge to you that I'm going to continue to do the best job I can every day to help make this organization successful. Early on in my tenure here, as I met with you, I indicated that I felt was my obligation to give you what I'm going to do today, which I'm calling my preliminary assessment, state of the organization, whatever you want to call it. Being independent, coming in here with a fresh perspective, I thought it was important, and that's one reason that you hired me, to come in here and tell you what I thought, and I appreciate the right to be able to do that. So I've been here almost 2 months. In some respects, it feels a lot longer than that, but I feel like I've seen enough in my observations to be able to, give you a viewpoint that has some merit. I tried to have a fairly organized orientation process here because coming in a new organization as extensive as ours, you need to have an organized approach or it's going to be very difficult. And certainly with the help of Adam and Jordan to set up a lot of meetings with the staff here with me, I was able to conduct some of those meetings with the staff, find out what they do, how they do it, a little bit about their background. Also, talk to each of you a number of times, including in March, at my suggestion, arranging personal one-on-one trips to get your perspective on issues, and all that was very helpful to me. I also reached out to our key service providers, and I had some preliminary discussions with HEK. I've talked to partner Clifton Larson Allen, PBUS auditor, talked to the person that manages Deloitte assessment. Also, I tried to reach out as much as I could to some of our key stakeholders at PBUS, the Budget Control Board, Retirees Association, and get their perspective on things. And there's a lot more I want to do along those regards. Certainly, I've also reviewed a lot of documents. Nowhere near all of them, but I reviewed quite a bit. And so I was able to go broad, but I'll be honest that I'm certainly frustrated that I haven't been able to go deep on as many issues as I'd like to after 2 months. There's been some good reasons for that. I've found myself almost since the first week here being faced with a lot of distractions in my orientation as I was going through that process. There's been a lot of emergencies and crises that I had to deal with here as the COO that did require my time, and I had to spend time to do it. I think some of that is pretty natural in my position. There's always going to be some of that to do, and I relish challenges, but there's been a lot. The last 2 weeks, probably 100% of my time has been spent on things other than really the day-to-day operation of the business. And I hope as time goes on, that can subside, because I'm really looking forward to doing a deeper dive here pretty soon into some of our processes. A little bit about what I see in the organization. Obviously, this is still a young organization. It's an organization that, like any young, growing organization, needs to look for continuous process improvement, and we need to acquire additional tools and resources to make sure that we increase our chance of being world-class. And I'd like to think that's what everybody's position is here. We don't want to be good, we want to be world-class. So I look back, I see an organization that certainly over the last few years, but even before that, recognized that we wanted to continue to do better and evolve, just like every good corporation and organization needs to do. We weren't going to be satisfied with the status quo, and personally I think that's something to be commended and not criticized. But this leadership here recognized that and took steps. And so, an important thing that I see we did was we talked to and sought out a consultant, an expert, Deloitte. And from what I understand, we didn't ask Deloitte to come in here and tell us what we did right. We asked them to tell us what we could do better. And they did. And they told us there's a lot of things that we can do better if we want to, in my view, get to being a world-class organization. And then we did what we should be doing. We started implementing those recommendations. And certainly, we're governed by time and resources here, but we've nailed some important ones, and I can assure everybody in here that none of the staff has any intention to stop. And we're going to continue to implement those and other important changes that we believe are necessary. And I'm not going to go over those in detail. Someone will listen to the AIP, but I think they're on the record of some of the accomplishments, and I think next month the Audit and Compliance Committee are going to talk about an update on that. There's no organization on this planet that's perfect or stops evolving, and we're not going to. 2005, look back to where we were back then. I think there were 2 full-time staff. In July of 2009, I think we were up to 16 full-time staff and 1 temp. And right now we have 33 full-time staff and 10 temps. We are a different organization than we were 2, 3, 4, 5 years ago. And I hope that everybody recognizes that's reflected in how we do business. We have implemented a lot, and we're going to continue to implement a lot. So I'm very impressed, and I want to make that clear, with the leadership of this organization that's taken the steps to continue to transform this organization. Going forward, there's a lot more that we will do and a lot more that we need to do as any growing organization. And I plan to work closely with the commissioners and the staff on continuing our transformation. Most of you know me by now. I am a process person. I believe in process. And you need to have a good process. And if you don't have a good process, you talk about it, you think about it, and you change the process. And once you have a good process, then you have good people running that process. If you don't like the people, then you change the people. But when you have a good process and you have good people, then you have to rely on that and you have to monitor the results. And then you can make changes and tweak and adjust and do course corrections. But you need a good process, you need a good people, and if you don't have a good process, you're wasting your time. You have to define it and have a good process. And you can't have mistrust in it because it wastes time and energy. And that's one thing that I'm going to be looking for all throughout this organization, to get us to believe in that process of the people. I think it's important that we have. I think we need to be more demanding of our investment managers. You know, we are the customer. And I know, coming from venture capital fund, what our LPs asked of us, and I think that we're going to be able to do that. There's actually steps taken right now. John Reiter is going out, and we're sending out additional fee information templates as of March 31 to try to get more fees faster. And I think there's probably a number of those types of things that we can continue to do. I want us to spend more time talking to peers, other large institutional investors, and see what kind of systems they have. And I know we've done that. I want to personally do it. I'm going to reach out to my contacts. We shouldn't be recreating the wheel. We should be taking advantage of what other people are doing, and I plan on making sure we spend enough time doing that. We're an organization that's going to need more technology and more resources. Like I told you, the growth we've had, we've doubled in 4 years. 4 years now, we're probably going to have to double again. We don't control that. We don't control our budget. You know, we're going to ask for a budget. It's going to be approved. But that doesn't mean that we don't have the resources to manage the business we have today. The other thing that we need to do is we need to do a better job with education to our stakeholders in the community. We need to do a better job of outreach, and I want to make sure we do that. We have to define ourselves as opposed to letting others define us. And I think we need to change our opinion, our image out there, what I think is kind of mysterious or a black box. And so I'm personally excited to announce today a campaign that we're going to be embarking on that I'm kind of calling Get to Know Us. And my vision of that is letting our stakeholders and letting the community know about us as individuals, what we stand for, our skills and our capabilities, and explaining our business to them so that they can understand it. What does asset allocation mean? Why do we compare to benchmarks? Why do we pay fees? We need to explain that to people, okay? Because there's nothing here that we have to hide. And I want us to use social media, and I want us to use our website to put that information out. And I want us to get out into the community and meet with people face to face and talk with them and make presentations. We have a great story to tell about a complicated job. And I think our stakeholders need to know that. And so I'm going to be working closely with Danny, and I think we'll be reaching out to a number of members on this commission to give us a hand in that as well. You know, it's up to all of us to make sure that that happens. A little bit about the staff. Each day that goes on, I get to touch more and more of our staff, and I'm working my way down the organization. And I have to tell you, I am impressed with the people that we have. We have a broad base of talent. We have a lot of people that are just extremely dedicated and loyal to the organization. And I don't see a lot of 9 to 5 here. I see people in there early and they're in there late. And I look in their eyes. I observe people. And there's a sparkle in a lot of their eyes. And that means they want to be successful. And they're here because they believe in what we're trying to do. We're trying to help the participants and beneficiaries of this trust not worry and not rely on state funding to keep this ball rolling. I want to make a statement about Herschel Harper. I'm really happy that our skills, I think, are almost a perfect complement. And he is going to be watching the investment side, and I'm going to be watching, I guess I'll say, just about everything else. And I think that's what our skills are suited. Herschel and I, immediately, I saw him out and we started talking about things, and he helped me get up to speed. And we had some pretty candid conversations, and we don't agree on everything. But we sit there and listen to each other, and we reason things out, and I think everything we've had to come to a decision on, it's been a good compromise, and I'd like to think so far they've all been the best decisions. I'm happy with all of them. I am pleased as punch. I'm glad he's on my side, and I'm happy to call him a friend, and I look forward to the synergy that we're going to create, and I just can't wait to see the results of that. So I just want to put that out there. So another thing, when you get to know me, I like to take informal surveys sometimes. And so I want to take one now, if it's okay with you. Don't worry, there won't be a test on this at the end. But I'd like to know, anybody in the room, over the last 2 years, does anybody look back and thought that they might have been able to do something different or better in hindsight? Or, heaven forbid, they might even have made a mistake? We're all human, and sometimes you make mistakes, and you've got to learn from those mistakes. Great companies make mistakes. Sometimes that's how the best ideas are born. Somebody made a mistake and it turned into something great. And we can't be afraid to make a mistake because it's a good learning experience. We try not to make the same mistake twice. And I want that culture instilled here. We can't be afraid. We have to challenge ourselves. I am trying my best with Herschel to put a culture in this organization that is high energy, staff is motivated, they're empowered to do their job, they know that it's okay to challenge each other, question everything, figure out ways to do things better, cheaper, faster. That's what I want to see. And that's what we all need to see. And they shouldn't be afraid to speak up. And that's what we're going to do. We need a positive work environment here. We need to be the place to work in Columbia because we need to keep attracting talent. And everything that we do that hinders that is putting us farther away from our goal. I want this to be the place to work in Columbia. You can have all the systems you want. You can have the best technology, the best software. If you don't have this, it's a waste of money. And we need this, and we need this to be focused on the job and not distracted. And that's, I think, a big part of my job, is to get our resources in here. The most important resource we have is our people, to use this to be focused on it. And I'm proud to work with this team so far, and I'm excited about what I think we can accomplish together if we have a chance. So, I guess the last issue what I wanted to talk about, as I told all of you over a month ago that I wanted to talk about. And it's an important issue, and I think today we saw more evidence why it's important. And it's and it impacts this organization and all of us in a number of ways. And it's the relationship that the commission has with the state treasurer's office. And what I'm going to say shouldn't be a surprise to anybody in this room, or frankly anybody across the country that reads the newspapers here. And the relationship just needs to be better. It just needs to be better. Now, I've only been here for less than 2 months, and I don't know all the history. But I've been on the planet long enough to know that there are two sides to the story. And it takes two to tango. And I know that some people tango better than others. But I'm the new COO here, and I got placed into the middle of this, and it is impacting my ability to do this job. My feedback that I've been getting from seeing what's been going on here is that because of the nature of this relationship, it's a high-maintenance situation for all of us, isn't it? It's high maintenance for all of you. I'm sure the treasurer's office and his staff would rather be doing other things. Our staff is spending a lot of time managing through it. It's a lot of time. It's a lot of energy being spent. The negative publicity is not good for any of us. It's not good for the commissioners. It's not good for the treasurer's office. It's not good for our image. It's certainly not good for our stakeholders. Now, I want to make it clear, I have the utmost respect for Mr. Loftus, as I do for all the other commissioners. And in fact, he and I have had a couple of very lengthy discussions that frankly I enjoyed. We didn't agree on everything, but I respected his right to say what he did. And I hope he did mine. Differences of opinion. Both of us do completely believe in transparency. I'm happy to say that. I think the treasurer over time has made valid points here, and I think everybody will agree with that. I think there's some issues in method and tone. And I think that Dr. Pritchard commented on that at the February 28th meeting, and in fact, the treasurer and myself also discussed it. I've told all of you, and I've told all the staff that we need a better relationship, and that I'm committed to that. I'm committed to trying to get us to that relationship. And what that means is we're going to have to start to let go of the past, and we're going to have to look to the future. That doesn't mean that when issues like today and other issues are discussed that there aren't going to be disagreement and debate. That has to be encouraged. Nobody agrees to everything. It's unhealthy. But I think we need to understand that it needs to be reasonable and respectful. And when you have good debate, I found that it often leads to the best decision. I think we need to improve our communications with each other. I think we need to quit talking to each other through the public meeting. I think we need to talk to each other. And I think we need to pick up the phone and call each other and send email instead of sending an email. And I think we need to get face-to-face with each other. And I've always said, my door is open. If it's important enough to talk about, come over and talk to me, and I'll get everybody in the room to try to solve the problem, because I'm not a procrastinator. I don't have time for it. I'm from private industry, and I'm learning to operate in the public environment, and I'm probably have already and may in the future make mistakes as I learn that. And so I appreciate everybody's patience with me. But that's how we would handle things in private industry. You get everybody in a room and solve it. A lot of these things just aren't that hard, but for some reason here, to me, they seem really hard. I want us to have clearly defined processes that we all agree to. I think there's a lot of definitional problems around here. I think we all know there's some in the statutes, but by goodness, there shouldn't be any in what we create ourselves. So I think I think as time goes on, we need to make sure that they're there. I think there's a couple long-standing issues that we keep talking about. And the treasurer, brought up one today. And personally, I want to get it solved. I think this issue of, confidentiality and staff not having access, this is an issue that needs solved. Now, I'm a reasonable person. I'm going to keep an open mind. And if I do anything before the end of my tenure here, I'd like to see that issue solved pretty quick. I'm going to start working on it soon. I've already mentioned that to people. That issue needs to go off the table. And I think reasonable people ought to be able to solve it. My proposal is that we need to work together better. We're all here for the same cause. There isn't any reason why this can't work. I think we need to increase the level of mutual trust between the commission and the treasurer's office, because I think it's low on both sides. And I think if we can accomplish that, I think we're going to make great progress in going forward. I think it's critical that we do this, and I think it's beneficial. And I'm committed to making it happen, and I hope everyone here will join me. And so I want to summarize by saying I am very excited to be here. I think it's a very dynamic organization that has challenges ahead, and I like challenges. And I think all of us play an important role in making this organization successful. And I'm excited about where I think we can go, and I think if we work together, we do have a shot at achieving greatness and making sure that we don't have an unfunded pension liability going 30 years. Thanks, Mr. Chairman.
Thank you, Darren. Any commission have questions of Darren? Okay. Ed, you want to be ready?
Yes, I'd like to be recognized in the next statement. As follows. Without a resolution of the conflict between the treasurer and the commission in the next 30 days, I will resign as a member of the commission effective 31 May 2013. I am deeply concerned and alarmed by the continued adversarial relationship between the commission and Mr. Loftus. I fully understand that the treasurer has taken what he believes to be his responsibilities and obligations far beyond what previous treasurers have undertaken, and is absolutely serious in implementing them. However, it has become painfully obvious that there remains little or no common ground of agreement between Mr. Loftus and this commission, and that competent authority must define the extent of the treasurer's authority and responsibilities as they relate to the retirement fund and his role as a member of the commission, statutory custodian, and the state treasurer. If my patience is short, my recognition of how serious and vigorously Mr. Loftus has undertaken his responsibilities is much larger. My sincere hope is that any areas of disagreement will not interfere with respectful personal relationships. And I also sincerely hope that when all this is sorted out, that some measure of sanity and clarity will be a result. I will also extend my wish to Mr. Loftus that there be no personal animosity between us, and I will do anything that I can to put any disagreements that we've had behind us. And if I have a remaining period on this commission, I will do my best to ensure that we can work together in a harmonious fashion. Thank you.
Thank you. Well said. I think all of us know the time is short before we can get this problem solved. We should work on getting them solved. At this point, an issue has come up in the last 3 or 4 days, and I think the commission needs to retire into executive session and get some legal advice. And I would move that we do so at this time. I can get a second. Any discussion?
Don't have to state those topics.
Yes, sir. To get legal advice.
Legal advice. Yeah, do we have to state what the matter relates to? Do we have a motion?
Yeah, we have a motion and a second.
Okay.
All in favor of going into executive session, signify by saying aye.
Aye.
Aye. All opposed? Ayes. Ayes have it. If we could clear the